think by the end of Trump's term, gold will be through 6,000. I think it's
Wow.
very easy to see, for me, the way I look at it, that it's going to happen. And what we saw in the tariff war was really interesting because April the 2nd was supposed to be Liberation Day. It was a tariff war against everyone. And then it gets dropped except for where? China. So really, America came out just against China. Then they would say, if there's World War III, it's negative, you shouldn't be doing this. But if America takes on the world, then backs away to the rest of the world and is trying to do separate contract transactions, but still fighting with China. That's where the real battle is. So China keeps buying the gold. China wants to de-dollarize as a main trading currency. So this dynamic says for other governments, you better own some gold against your paper money.
Gold is off to a historic run. 2024 saw prices soar 27%, driven by U.S. interest rate cuts and escalating geopolitical tensions. That momentum only intensified in early 2025. With expectations of further Fed easing and Donald Trump's proposed tariffs stoking global uncertainty, gold has surged to $3,500 per ounce. According to the World Gold Council, investor demand is leading the charge, with total gold demand in Q1 2025 up 40% compared to the same period last year. Frank Holmes, CEO of U.S. Global Investors, is even more bullish. He's raised his gold forecast to $6,000 by the end of Trump's term, up from $4,000, citing persistent geopolitical risks, China's aggressive gold accumulation, and its ongoing efforts to dethrone the US dollar in global trade. Holmes sees this as a clear signal. Governments are increasingly turning to gold to safeguard against the risks of fiat currencies. Central banks are leading by example. The Reserve Bank of India added 25 metric tons to its reserves between September 2024 and March 2025, a 3% increase as it looks to diversify in a shifting economic landscape. Meanwhile, the People's Bank of China has increased its gold holdings for 6 consecutive months, bringing the total to 2,295 tons. That's nearly 7% of its total foreign exchange reserves. Holmes emphasizes that others must respond as countries like China and India flood their economies with new money, while the US and Europe are expanding their money supply slower. Marking gold to market could serve as America's financial reset button, demonstrating its borrowing strength and sending a powerful message to the world. We're about to explore the video, but first, subscribe and hit the bell icon to keep up with our newest uploads. Your feedback in the comments is always appreciated.
Trump's term, gold will be through 6,000. I think it's
Wow.
very easy to see, for me, the way I look at it, that it's going to happen. And what we saw in the tariff war was really interesting because April the 2nd was supposed to be Liberation Day. It was a tariff war against everyone. And then it gets dropped except for where? China. So really, America came out just against China. Then they would say, if there's World War III, it's negative, you shouldn't be doing this. But if America takes on the world, then backs away to the rest of the world and is trying to do separate contract transactions, but still fighting with China. That's where the real battle is. So China keeps buying the gold. China wants to de-dollarize as a main trading currency. So this dynamic says for other governments, you better own some gold against your paper money. Another factor, in addition to the M2 money printing by Chindia, my thoughts when I look and try to create a matrix of factors that would drive that. If you took some of these old great monetary and look at total money supply out there divided by the price of gold or gold supply, then gold should be $15,000. Well, I'm looking at other factors and looking really focused on the G20 countries and their money supply and their fiscal and monetary policies. They just remain very bullish for gold. And there's a greater interest coin has done. It's woken up a lot of investors that you have to have decentralized assets and you have to have them outside of the realm of governments and banks. Because what we saw in Canada under Justin Trudeau during COVID, he took away the rights of people to have a protest. And then when the trucker strike was basically for liberty and rights, they turned around and locked down bank accounts and took away your money. Unheard of. That's what you have in Zimbabwe 10 times this century, have confiscated all US dollar bank accounts from citizens. That would never happen in Canada. So the thought process of the young generations X, Y, and Z and millennials are saying to the baby boomers, you have to have assets that are decentralized and outside. So we're betting on Bitcoin, but you better own some gold too. It's just wise. If you feel safer having something tangible, then you should own some gold and own some silver coins and stack them somewhere else. In Zimbabwe, there are fortresses built where they put US dollar bill in a safety deposit box. It's not the bank because they know the government will use the bank to confiscate your US dollar. And they also put gold in those safety deposit boxes. So just think of a brand new financial industry is the protection of these decentralized assets, like they have caves in Switzerland for storing gold. We have to really rank it against other countries and other paper money that are out there. So you want to be looking at the GDP per capita growth. Those are an M2. You have to add those on because they create these nuances of doing that prediction. It just if the US dollar is going to fall 70%, these other currencies are going to fall 90%. That's just put that in that context. So it's important to own gold against any paper currency, and that's what's happening with central bankers. They've figured this out now that they should be owning gold because they have no idea what's going to happen with not just President Trump with his tariff battle, any other major government.
A recent analysis by the European Central Bank reveals that structural weaknesses in the gold market, exacerbated by escalating geopolitical tensions, could significantly threaten financial stability in the Eurozone. Gold prices recently surged to an all-time high of $3,500 per ounce, driven partly by the economic fallout from former President Trump's global tariff policies. While prices have since pulled back, ECB economists caution that significant risks persist. The Eurozone's exposure to gold derivatives has ballooned to €1 trillion, marking a 58% increase since November 2024. This growth is primarily attributed to opaque over-the-counter trading and non-centralized clearing systems, heightening systemic vulnerability. According to Frank Holmes, CEO of U.S. Global Investors, the ECB fears gold just as much as it fears Bitcoin, viewing both as decentralized stores of value that undermine its authority over monetary policy. Holmes further suggests that this resistance may be rooted in concern. Some central banks may have lent out portions of their gold reserves and now fear potential recall, prompting them to suppress gold's role in the financial system. Now, let's redirect our attention to a video.
Well, the ECB is afraid of gold as much as they are afraid of Bitcoin. They're both decentralized assets, and them rising creates an instability in their policies of printing money. So I think it's much more of them being anti anything that's decentralized that is some form of portable wealth. Gold is physical, tangible, portable wealth, and Bitcoin is virtual, but it's portable. And you have the same argument that they go against both. And we've seen this also with the Bank of International Settlements. And it's just how they are. They believe that they're the wizards of the world and they know how to print money. They're smarter at modern monetary theory than anybody else, and these assets like gold shouldn't be in your portfolio. Everyone's accumulating because they want to create credibility for their paper money. If you don't have gold as credibility, then people don't trust that paper money, and that's what we're dealing with. And I think maybe they lend out some of their gold. Maybe some of the countries and economists that write this piece of paper had lent out their gold, and now they're worried that their gold is going to get called away from them. So they create this sort of negative narrative to have it sold down. I don't know, but I do know, and we all know, that there's a big push by China for de-dollarization. And that is the most significant battle. And in addition to that, they have one road, one belt. A lot of people are not aware that the Chinese under Xi Jinping has been absolutely brilliant, and he's lent out over $2 trillion. There's 195 countries, over 125 have borrowed money from the Chinese. And then they turn around and start buying seaports. Forget the Panama Canal. They have seaports all over the world now. They have invested in something like 90 to control global trade. And then they have their own shipping company, and then they could put surveillance in the shipping company and put it in their ports, all these ports, to be able to monitor what the U.S. is doing. Well, and then they attack the U.S. dollar. Well, all these things all of a sudden start to cumulatively add up. That gold is, with central banks are saying, we have to have some gold. And look at Turkey. They're smart to have gold because their currency hit an all-time low last week. And citizens there, they're big into physical gold. You go to the bazaar, there is spectacular to see, but there's 24 karat gold jewelry everywhere. There are continuous. If you see this century, and a lot of non-gold investors are not aware that gold has been positive 84% of the time. And it highly correlates with G20 countries practicing modern monetary theory. So they continue to use that mechanism. Gold is continuing to make new highs. But the added part is China, this big push, they continue to buy gold. And they continue to buy more and more gold. They're the biggest gold producer in the world, the biggest buyer of gold. And now last week, when Trump was busy in the Middle East, pushing this big $2 trillion business transaction deal, which is spectacular for America. So you can see these sort of rotations, and the biggest market cap gold stock today in the world is Chinese. So there are these interesting developments take place, and we get caught up with the trade war between Trump and China, Xi Jinping. But around all of that, other countries are saying that we have to have gold as support because we do not know where this paper money drama is going to go to.
Gold has surged as a safe haven asset amid geopolitical tensions, monetary expansion in China and India, and global de-dollarization efforts. Prices hit $3,500 in early 2025, driven by U.S. rate cut expectations and tariff risks. Central banks, especially in Asia, are aggressively buying gold, while the Eurozone faces rising systemic risks from gold derivatives. Growing distrust in fiat currencies and fear of decentralized assets like gold and Bitcoin push nations to secure tangible reserves to protect against financial instability. Do you think a major monetary reset is coming, and will gold play a central role in it? Share your feedback in the comments below. If you found this helpful video, hit the thumbs up and subscribe to keep up with our latest updates.